Morning, Steve Free in Chicago with the morning grain comments. Hope everybody had a super Sunday and had a safe and fun weekend. As far as the grains overnight, the calls were higher and the markets did open higher, led by the wheat. We've now backed off from those highs, especially in the soybeans, and soybeans are testing key technical support. No real reason the market's giving fundamentally is why the beans broke. I think that, first of all, there was a lot of talk on Friday that the crop is getting smaller in South America. The weather forecast in Argentina for the next 10 days is warm and dry. And I think that as much as, let's say, 100 million bushels may be switched to the U.S. as far as soybean demand is concerned. And the crush is also going to be higher. And so the carryout's getting down to kind of a low level. Then we fast forward to 22, 23, plug in what the acres the market's looking at, plus a trend yield, and the carryout's closer to zero than 200 million bushels. Over in the corn market, the same story. I think that corn export sales and inspections need to pick up to verify the fact that demand could shift from South America due to lower supplies there. We're also watching pretty closely the Russian-Ukraine situation, and if Ukraine can ship corn out of there that they normally do this time of year. In the wheat market, it's all about Russia and Ukraine. I mean, our wheat prices are still high relative to Europe as far as export demand is concerned. Southwest Europe, Northwest Africa is still dry. And for the most part, both domestically and around the world, end users are short. And I think that offers support underneath the marketplace. Southern Plains weather forecast for the remainder of February continues to be dry. And we actually could start seeing a southerly flow of the air mass that could actually bring temperatures higher and maybe even above normal. So fundamentally, there isn't really a lot of reason why the market can't push higher except this time of year. February is usually not the best time of year to push the markets higher, especially if we don't have the export pace beans, corn, and wheat that we need to bring in more bulls. The open interest continues to go up. Managed funds continue to add to long positions in beans and corn and remain short wheat. And so all these things, I think, down the road is going to make for a higher trend. Volatility, though, is going to increase pretty dramatically. There'll be vacuums, like overnight in the beans. The managed funds don't trade the beans until 8:30 a.m. on the opening. So I think outside markets, we'll be watching the Fed in March. We're watching inflation. Obviously, the geopolitical issues, Russia, Ukraine, and the crude oil, again, is testing at $1.96. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.